Hello and welcome to our continuing coverage here from Davos 2023. It's a very cold morning, so thank you very much to Bob Moritz and Sanjeev Krishan of PwC for joining me here today. Gentlemen, I know it's cold. I'm going to keep this as brief as possible. For the benefit of our viewers, PwC put out its 26th annual Global CEO survey yesterday. And very quickly, just to capture the headlines from the survey, 73% of the CEOs polled believe that they will see a global economic growth decline over the next 12 months. This is the most pessimistic outlook in over a decade that the PwC Global survey has put out. Bob Moritz, I want to start with that. Through the course of the pandemic in 2020 and in 2021, the mood was completely different. CEOs were still optimistic about growth. What explains the significant departure where you have the most pessimistic outlook in over a decade?
Let's remember that the CEO survey is focused specifically on comparison to last year. So last year, coming out of COVID, we had an uptick. We had significant confidence that prior year was difficult. It'll be better this year. This year is going to be harder. The three things that are driving it being harder this year to see that growth: macroeconomic volatility and the disruption that we see, the combination of macroeconomic implications to interest rates and inflationary pressures, particularly the supply chains and the like. And last is geopolitical pressures now that are actually implicating the global economy in a big-time way. So those combination of factors are really causing that pessimism on the economy itself. The question is, how do CEOs manage through that?
You know, I'll get to the management part of it in just a second, but let's talk about inflation and interest rates. I mean, this is an era of high interest rates and high inflation that many CEOs who are in the hot seat today have not experienced. What is that going to mean in terms of how they navigate through this? What is it going to mean in terms of expansion, investment, private capex? What do you hear?
So what we'll probably see is first a real hard focus on cost and managing those costs as best they can, taking inefficiencies out of their organizations. They are going to try to protect as much as they can the human capital. Why is that? Because they see attrition staying the same. Even in a slowing economy, those with skills are going to be very valuable and very wanted by employees around the world. So you're still going to have to pay wages, benefits, and actually upskill the talent. The other thing that's going to happen is you're going to start to see some bankruptcies. Those organizations that were able to ride the curve, so to speak, and ride that wave, higher interest rates means they're not going to have access to free money, for lack of a better word. So we'll see bankruptcies. We'll see restructuring of debt quite a bit. And we'll see some organizations sell off businesses to create some value to pay that debt down. We'll see other organizations take some risk and actually say, hey, there's an opportunity to maybe out-execute my competition. So M&A will trickle through just in different ways around the edges of portfolios.
You know, it's interesting because you talk about insolvencies moving up. You're also talking about the possibility maybe of zombie companies and others falling by the wayside on account of the higher interest rate environment. But you're saying that companies at this point in time, and I'm caveating that, at this point in time, are not talking about laying off people, are not talking about wage correction either. So what we're seeing happen in the tech industry, you don't believe that that is going to be a secular trend?
So what you see right now is around the world, 60% of the CEOs are saying, I don't plan to do this as of today. But what you are seeing is across certain sectors a little higher getting to yes to that answer. Chemicals and consumer, in particular globally, definitely are starting to potentially go in that direction. If you actually go a little bit deeper, in the U.S., you will have a higher proportionality of CEOs in the tech industry and the financial services industry that, in fact, are doing those headcounts because they are trying to get ahead of those issues, and especially when you look at the size and scale of those organizations in terms of what they're doing around the world.
I want to talk about, different parts of the world, and let me start by talking to you about the U.S. Mixed opinion. Many CEOs that I've spoken to, some do expect the economy to move into a recession, albeit a shallow one. Others believe that we're probably going to miss out on one. What's the expectation specifically as far as the U.S. economy is concerned?
So the U.S. economy has got a degree of resiliency with it, and I think they're focusing primarily on how is the consumer situated, how are they doing in terms of their purchasing power and their debt ratios, and they still feel pretty good that they can work their way through that while we're watching the macroeconomic fiscal policies coming out of the Fed and the like. So the confidence level is generally good, with a warning sign that people are paying attention to, and a preparatory mindset, which is I got to get ready, be better prepared, and cut costs as much as possible, redesign my supply chain and my business processes. So you'll see structural transformation in the U.S., but the world's depending on it, and there is a solid foundation for it to actually say we feel good today. It's a worry about things tomorrow.
You know, I want to talk about China because that is one of the X factors that everyone here in Davos is talking about as well. Reopened much faster than was expected. There seems to be some softening even as far as the regulatory crackdown on different sectors is concerned. What's the expectation? Because there is one view of anywhere but China, but that's not what you're saying.
No, we're actually seeing a little bit of opposite. You've pointed already to some of the changes that have happened in China, the opening up, the combination of some of the policy changes that President Xi and the administration have changed to allow for that domestic agenda to come back to life again. And I think that's going to be very important, both in terms of the stability of China itself and getting to positive GDP growth, which it'll have, but also what role will China play in the world in terms of the investments they're making. Let's remind ourselves they were playing a big global role with their Belt and Road Initiative, and as a result, you want to see that come to life as well. So that's going to be a positive in the world today. It comes through in the CEO survey as well. That CEOs are seeing an opportunity in China, but they're going to do it differently. I'll come back to that. And second, the CEOs in China, much more positive compared to others around the world.
Let's talk about India. And of course, India continues to be much more optimistic, both in terms of the domestic outlook as well as the global environment. What are global investors telling you about India at this point in time? What does the survey throw up?
India continues to be a bright spot in the world that we see today. When you look at the combination of mid-tier growth rates from a GDP perspective and the stability of the country itself in terms of what's happening. Let's remind ourselves, between the talent that India has as well as the manufacturing capabilities and being an alternative from a supplier of goods and services around the world, big opportunity. So India is seen as very positive right now. And I think, personally, there's going to be a lot more upside potential for India to capitalize, both in terms of how it serves the domestic economy, but also to be a supplier to the world as organizations redesign supply chain. As long as India is economically feasible, it's got stability and that maintains itself. It continues to leverage the talent that it has. And if they can do one thing differently, it's can you make your supply chains much more greener? Because the consumers will demand that. The ultimate business partners will demand more greener supply chain. If India can do that, it's a world of opportunities for it.
Well, Sanjeev, I'm going to segue to you now and get a little more granularity as far as India is concerned. And Bob was talking about the supply chain opportunity, and that's an opportunity that the government as well as the private sector is hoping to capitalize on. What are you picking up in terms of what that's going to mean over the next 2 or 3 years? Because the time is now, the opportunity is now.
Yeah. Most certainly, I think it's a 2 to 3 year opportunity as we see it. As global organizations look to reorganize their supply chains, India has a big opportunity. It's not about X+1 or Y+1. I think it's about India's strength. And I think the government of the day is actually trying to do enough, whether it is in terms of incentivizing them for import substitution or for being a producer to the world, if not the entire world, part of the world. I think there is enough of that happening. Look at what's happening, what the government is trying to do on the semiconductor side, for instance, right? It's extreme, large amount of subsidies coming from the central government and also from the state governments. We see a lot of state federalism, competitive federalism at this point in time. So I do believe that India primes itself at this point in time as someone who could be an alternative and create that alternative for global companies and also for itself. Let's not forget that, a large part of Indian exports are dependent on the imports that they do, for instance, pharmaceuticals and others. And I think there also the Indian companies are focusing on nearshoring or localizing supply chains. And I think some of the incentivization from the government is really helping.
I want to pick up on one of the data points that Bob was talking about, and that the survey throws up that 40% of the CEOs polled don't believe that they will be economically viable in the next decade or so. What does that mean specifically from an India point of view? What are you hearing from your Indian clients, Indian customers, in terms of transformation, in terms of reinvention, in terms of reimagination?
So I think the good news is that people acknowledge that these are tough times. And I think some kind of challenge always helps. It helps you repivot your business, reimagine your business a little bit. So I think there are 3 things which are which Indian businesses are focusing on. One, I think the customer expectations are very different. For instance, look at direct to customer. I mean, that's become a big theme for retail businesses and even for businesses which were thought to be a B2B businesses. I think that's one of the big changes which is happening. I think the second one is the adoption of technology and digitization, even in smaller businesses. I mean, the big businesses will do it, but even the what we call the private and entrepreneurial businesses, you can see that they are focusing on it and they're leveraging the benefits of it already because they realize that they are part of a supply chain of an OEM and the OEM has ambitions and they cannot be not focused on something like that. I think the third thing which is again standing out is the focus on climate change, which is now happening. And Bob mentioned it just now, that can India do it? I see a lot of them actually focusing on it. 72% of Indian CEOs are saying that they are actually now designing products or services which will be compliant to the changing norms that are happening. Let's also be conscious that India is a capital-starved market. And capital is actually now telling people that I want you to be compliant with certain things.
Yeah.
And now we're moving away from not just, emission or, lower carbon, but also adaptation. And I think that's the journey that Indian businesses are starting to do. Now, I think all of this will keep us in good stead as they think about their 10 years.
Yeah.
While they're saying that 40% are saying that we may be challenged if we don't change,
Yeah.
I think the good news is that they're trying to think that how they will reimagine the future and change themselves.
Bob, I want to address one of the other issues. And while it's been a painful year as far as the tech sector is concerned, we've seen the layoffs and, of course, we've seen what's happened as far as the stock market correction is concerned. But the secular trend of investing on technology, digitization, that continues. In fact, the survey highlights that over the next 12 months, if there's anything that CEOs are willing to spend on, it is moving on the digitization journey.
Without a doubt, you see it. We ask CEOs, what are you doing today and what do you need to do tomorrow? And it comes up, I've got to actually focus on automation, leveraging AI and automating processes. That's actually a benefit to the company as they think about managing their cost base, is actually a benefit to India as well.
My final question to you, you've been working with the WEF here as far as the ESG metrics are concerned, reporting standards. How far have we moved down that journey? And given the economic climate, do you believe that some of the ESG goals, targets, funding, financing may see a setback?
No, actually the WEF, as well as other organizations, have been pushing really hard to get what I'll call the reporting mechanisms in place as a way to deal with accountability, to actually get information in the right people's hands, the investors, the capital, into the right places so they can make the right decisions. There's been a lot of progress. My expectation is this year you'll see some global standards come out in terms of a consultation process, and that'll focus primarily on climate to start and then some social metrics thereafter.
Well, Bob Mortiz and Sanjeev, many thanks for joining us here on this
Great.
cold morning here in Davos. Appreciate your time. We hope the temperature rises and the mood changes as
Very
well.
much so.
But thank you very much for
Thanks
joining
very
us
much.
today. We are going to take a break here and come back with more conversation. Keep watching Davos 2023. We're back in a moment with more.